Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys. Good morning. Welcome back to another live stream. Hope everyone is doing well and trading safe in what is, I don't know if everyone knows this, but today is a massive day in the markets. May not seem like that because you don't have a lot of red folder news, if you will, not a lot of economic data dropping, but today is absolutely massive. If you know exactly where I'm going with this. NVIDIA earnings after the bell today. That is the story. That is what is coming down the pipeline, and it's going to be huge. So, couple things to note about NVIDIA earnings. If you are somebody who trades the indices, this is going to be really big. And if you're somebody who doesn't trade the indices, it's still going to be really big because NVIDIA, you have to think about where global sentiment is, right? If you're going to be somebody trading Forex or gold or you're trading indices, NVIDIA earnings still kind of matters. And I'll show you why. Let's say you're somebody who trades gold. Why would NVIDIA's earnings report matter to you? Well, if NVIDIA earnings come out really good, let's say we get the big thumbs up from Poppy, we get the big A-OK from NVIDIA, meaning NVIDIA earnings smash expectations, they raise guidance, and things look really good for NVIDIA. How would that impact the stock market? Obviously, it's going to be a positive because the stock market, the S&P 500, I think it's like 7% of its entire weighting of the entire index is actually NVIDIA's stock performance. It might actually even be greater than that. I think it is in the NASDAQ. So the health or lack of health in NVIDIA's earnings report today will be monumental in whether or not the NASDAQ and the S&P 500 make legs higher. Are we going to see, NVIDIA take out the highs? Now, I also want to just mention something about the game plan for NVIDIA, okay? NVIDIA, I was listening to someone speak on this. Please check it yourself. Don't take my word for it. I believe that somebody was commenting that the implied or expected move for NVIDIA is a 10% swing in either direction on the stock. That puts you, guys, in terms of where NVIDIA could be by the end of today. It could be, and this is, of course, if the options market is right. Usually, if anything, the options market is a little bit overly cautious in their expectations. I wouldn't actually be surprised if NVIDIA is like up 5 or down 5 by the end of the day. But let's just go off the market's expectations for a second. If the market sees NVIDIA's earnings do really well and we see a 10% up move or a 10% down move in the stock price of NVIDIA, what would that do? Well, it would be a huge swing on the S&P and the NASDAQ, but more so than that, for people who trade gold, the dollar, for people who trade the indices, this is a pulse check on how the economic outlook is going to be going forward. Now, let me be clear about something. Some people who may not be following this as closely as, some of us have, may think, oh, well, NVIDIA is going to miss their earnings. I think it's going to, what if NVIDIA misses? The chances of NVIDIA missing their earnings are incredibly low. But if you're a bear, don't lose all hope, because that doesn't necessarily mean the stock price can't go down. And this is the confusing thing to especially new stock traders or people who watch stocks. If you're new to this stuff, this can be very confusing. Earnings could actually be great, and the stock price could actually drop. How so? Well, earnings, we've seen from Microsoft and Meta and Google and Amazon, the big customers of NVIDIA and the chip, semiconductor producers. We've already seen from them in their earnings reports that came out in previous weeks that the demand for chips is very strong. So earnings are almost certainly going to be very good today for NVIDIA. The question is not whether or not NVIDIA's earnings today are good. The question is whether or not forward guidance, right? This stock trades based on its forward PE, right? The forward price to earnings. Going forward, is NVIDIA going to grow into its oversized pants or not? There's huge expectations for this stock, absolutely massive expectations for growth for this company. If you want NVIDIA stock to go up or down, it's all about this piece of information right here. If you think NVIDIA is going to knock it out of the park with their earnings, then guess what? Everyone else thinks that too. That's not what's going to move the market. If you think going forward, the projection for earnings from NVIDIA, which are already projected to be very high, if you think they're going to bump those numbers higher, then that's a bullish catalyst for the stock. You have to take, it's kind of like, I'm not a sports guy, but let's say you can think of your favorite athlete, let's say Ronaldo, right? Everyone knows Ronaldo's going to be incredible. They know he's going to be great, but let's just say he comes out and starts, being even better than expectations, right? That's the equivalent of NVIDIA. NVIDIA's been doing that for years. So I'll say this, if you ask me, am I bullish or bearish on NVIDIA going into it? I mean, I'm currently already long the stock. That doesn't mean the stock can't drop. I could be wrong about this, but they have a pattern of beating expectations and raising guidance beyond where it currently was. That's why the stock has been a monster. It earns a lot of money, but it also projects going forward that it's going to make even more money than people thought it would. So this is, if you're somebody trying to get into stocks, you're trying to figure out stocks, it is all about forward expectations of earnings, not looking in the rear view mirror, although that can, be important to understand the valuation of a company. It's all about the future. You got to think, if you have a business today that produces a little bit of money, but you know that you've got a big event coming up that's going to massively boost your income for your business is worth a lot more than what it's made in the rear view mirror, right? That's the thing. Expected earnings today for the NVIDIA earnings report. Revenue is estimated to be $28.737 billion. Anybody got that kind of money sitting around? If you do, I'll give you my phone number. Maybe you could take me on a trip. But my point is, you got massive amounts of expected revenue here. And most likely, guys, they're going to beat that number. Most likely. Most likely, they're also going to beat their estimated earnings per share, which is 0.645. They're going to probably beat both of these numbers. If they don't, get ready. Because if you're somebody who thinks they're going to surprise to the downside and they're not going to beat these numbers, you're going against the herd for sure. You're definitely contrarian in thinking that, because we've seen all the earnings reports for the big customers. They're going to be making a lot of money. The question, though, is going forward, projecting into the future, their guidance on what they think they're going to earn is very, very important. I hope that makes sense. I just wanted to break that down for people who are trying to better understand how stock indices work and how individual stocks work. We've got that coming down the pipeline later today. It is the event of the week, in my personal view, especially if you're somebody who trades the indices. But again, it also shows the state of where the global economy is looking. You want to see these huge mega buyers of semiconductor chips. You want to see that continuing to grow. You don't want to see it slow down, because that would imply, slowing in the global economy as well. The demand for chips high is good for the economy. Low, not good. So what time is this news coming out? NVIDIA earnings happen at somewhere right after 4 p.m. It is not like your forexfactory.com where it's just a number that comes out like that. It gets announced. Their earnings, then you'll usually see maybe like 4:03 p.m. or 4:05 p.m. or sometimes right at 4 p.m. U.S. Eastern time. you'll get a big pop or drop in the stock. So we'll see. What happens if what happens to the dollar index if Nvidia report comes out? Well, if it comes out good or bad, it could move the dollar a little bit. Last time it didn't move it that much, but it could move it a little bit. And what we can see here is that going into this earnings report, the stock has been driving higher. So expectations are high, and we'll see. Are you streaming Nvidia's earnings, Nick? I kind of want to. Even if it's just for a little bit, I may do that. I don't think I'm going to do the earnings call, but I may do a little return stream just to watch Nvidia. Nvidia is a huge, well, not Nvidia specifically, but semiconductors as a whole make up a big chunk of my portfolio right now. So today could be a really great day for me, or maybe I have to give back some of my gains on this SMH trade that I've had. I'm to be determined what I want to do with my positioning here. I don't usually make big adjustments based on this stuff, but I may choose to look to trail a stop on my SMH trade, which has gone really well. I've got a really nice gain on this, but I'd maybe like to lock in something in case we get a big surprise to the downside today on Nvidia, causing the semiconductor industry as a whole to go lower. We'll see. Taking a look at gold here, I'm also long GLD this morning. Taking a look at gold spot price, we can see, again, sort of chopping around. You've got, a bit of indecision here. I would say that really the big decision point is these levels here. So I'm talking about specifically the all-time high, about 25.30, let's call it. And the big support zone where buyers really stepped in, where I stepped in and bought some myself, around 24.75, let's call it. So from a gold just purely talking price action for a second, if you get a big break to the downside, then perhaps sellers start taking over. And if you get a big break through the highs, buyers, again, continue to look good. Now, I know I kind of covered my bases there and just said, it could go up or it could go down. But if you listen closely, what I'm really saying is that if you take out these highs and you close above them, buyers are fully in control. And in my view, I'd be looking to add potentially to my position, looking to buy retests, etc. And if sellers are able to take out these lows, then that would be a very bearish signal, perhaps signaling more downside to come. Right now, where we currently sit, I lean bullish. I think we continue to move higher until something changes, because right now seems like the path of least resistance is for the Federal Reserve to begin cutting interest rates. And without overcomplicating it, that keeps me pretty bullish on gold. We can see on the top setups algorithm that gold is getting a bullish reading. We also have bullish readings on the NASDAQ and the Dow Jones, which, by the way, SMH makes up a big component of the NASDAQ. And I can't talk on it because it's top secret. But let's just say that another little tool that may be in the works right now also is signaling SMH. I don't know. Maybe there's something there. Edgefinder users. Oh, do you ever have just a secret that you really want to let out of the bag, but you can't? Your team said no. You really want to. You're considering it. I'm not allowed to. But let's just say I have reasons to be long SMH that are not just intuition. It is systematic. Here's a hint. It's not the Edgefinder. Whew. Anybody else just get goosebumps? I'm just kidding. I didn't get goosebumps. I just thought that was funny. All right. So let's keep going here. So also, for those of you guys who have not heard already, thank you, Chandler, for dropping this link. The Edgefinder is currently 35% off. If you don't already have a copy of the Edgefinder, you can currently get it for a super discounted price. If you'd like some information on that, we just dropped the link here in the chat. It's right below me here. If you click that link, You can start a live chat right now with a real person, not a robot, no automation there, just a real person that can get you some information about the Edge Finder. If you're somebody looking for 35% off the tool, take advantage. It's a great opportunity to get the get access set up. It's a one-time fee, by the way. Our tool is not something you have to pay for monthly. There's no subscription. It's a one-time fee. So if you'd like to get access for that huge discount, pay once and you got access to the Edge Finder. So this thing tracks everything from indices to currencies, commodities, and so much more. It is the primary, tool that I use to make my trading decisions, and it has been monumental in my own trading career. So take advantage, get 35% off. Rules are made to be broken. I know. You're so mysterious, Nick. I know. Just kidding. But yeah. Just know that the next few months are going to be really fun. We got some really fun new stuff coming out. All right. Let's keep pushing on. I had something I wanted to say, but I forgot what it was. Let's just check in on some stuff. RTY, this is the Russell 2000 index. Come on, Russell, give us a little bit more upside. I'm long IWM currently, giving back some profits on this one. I will stay in the trade unless we take out this low here. So on IWM, I'd love to see this thing actually take back the highs. Let's do this. So this is kind of where I think price is going to go ultimately. However, if I'm wrong about that, so I entered on this big drop here, went long IWM, which is the Russell 2000 index. It's had a nice bounce back this year in the second. Well, it's underperformed the other ones, but it's had a nice bounce back recently. And my thought process on this is that with the Fed expected to cut interest rates, I'm a buyer on dips on this one. And my thought process for this is that I'll stay in the trade unless we give back all those gains. So this was the Fed. This was when Jerome Powell gave his very dovish speech. Fed came out, Jerome Powell came out, made his announcement, that they think it's appropriate to now begin the process of cutting rates. That was super dovish. And then the markets popped. The last few days, they've been giving back some of those gains, which I think is fine. And I'm not, too worried about that. Unless we come down to this consolidation, we should see a reaction to that area. If we don't continue to see buyers stepping in, then that would be a signal for me to cut the trade and just take profits. So if we, I'll take a lot less profit if we hit this than where I'm currently at. But I would just rather cut the trade and look for an opportunity to re-enter at a better price if it's not reacting to areas like this. So I want to see that consolidation hold after the big breakout. If you see something like this, big break and a retest that area, for me, price action wise, I really want to see that area hold very nicely. Otherwise, what's the deal? Like, is something, it loses that decisive uptrend factor. So I'm watching it close. The Russell is, something that I am very bullish on this year, but price action has to agree for me to stay in the trade. All right, let's take a look at the dollar index. Dollar index here bouncing a little bit off of that 100.55 level. At the top of this week, I was discussing that I think that it's possible that the dollar index has a little bit of a move back up. I'm not betting on this. I don't think that's what's going to happen, but I think it would be very normal for it to happen, if that makes sense. So I'm not buying the dollar here. I'd be more interested in selling it on a retest of an area like the 50% retracement. So if we get this move, I think that would just be a very normal pullback in a downtrend to look for continuations on the dollar bearish setups. Hopefully that makes sense. That's, oftentimes people will like to trade the pullback, and I'm sure that there are, many traders who like that kind of idea. They can trade that pullback. Maybe you can find a short-term, kind of bounce. I find that trade to be a little bit more difficult, so I personally don't usually engage in that. I'm really interested in, this move. Obviously, who wouldn't be? But I've had a lot more success trying to go for the second. The retrace is not very profitable for me, but then that big moves, the trend moves, are really where I've made the bulk of the gains that I've made over the years in the markets. Doesn't mean that it's the only way to trade, just the way that I prefer. Again, if you are somebody who can trade these pullbacks, then great. That's awesome for you. Do your thing. I'm not here to tell you can't make money trading the pullback. I just think you have to be careful because it's a tricky trade. Because this thing, if most likely, if there's a good fundamental reason and you say, I think that the dollar index continues going lower, I'm just going to buy it in the meantime. You're like playing musical chairs, right? The music's going to stop. I mean, you don't know that the trend is going to continue. But probabilities wise, if you're a fundamentalist like myself, you have a good reason for thinking that the dollar index could go lower. Let's just assume that the end result for the dollar is to go lower. Let's assume for a second. It's a dangerous assumption, but let's just do it anyways. If we make that assumption and you're trying to play the pullback, look at the scenarios that could happen. Okay. I just drew 4 different green lines here. And let's discuss this for a second. If you're somebody trying to play the bounce, here's where I would just be cautious. We could see scenario 1 where the market just immediately drops and there is no pullback. Like this was the entire pullback right there. It's possible that is what happens. Number 2, let's say you go for, something and then we just reject this area here and then immediately sell off. There's a tiny bit of upside from there then. If you're looking at scenario number 3, then yeah, you got a little bit of upside. And then, we sell off at the 38.2. Let's just say that happens. And then scenario number 4. But here's what I want to show you. If you're trading 1, 2, 3, 4, obviously 4, you could make some good money. But 1, 2, 3, all are limited upside. But here's one thing I want to show you that is kind of cool. If you're somebody who's more of a trend follower, every single one of these scenarios where the dollar index ends up ultimately going lower, the risk to reward makes a lot more sense on the short side. Again, we're making a dangerous assumption by assuming that the dollar index ultimately goes lower. That's not a certainty. There's no certainties in markets. But look how big the risk to reward here is, right? If you put a stop there, huge risk to reward. What about scenario number 3? Well, scenario number 3, still wonderful risk to reward. What about scenario number 2? Scenario number 2, still great risk to reward. And scenario number 1, even if you're thinking we're already oversold, well, what if we reject this? You put a stop right here and we see the meltdown continue. Still a great risk to reward. Does this make sense? I hope that that illustrates the point about if you're a trend follower, oftentimes you can get some really good risk to reward going with the flow rather than trying to fight it. So when I look at the dollar index, could it have more upside in the short term? Sure, it could. I think my best judgment call is I think the dollar index goes lower. It could go lower here, could go lower here, could go lower here. If you're very bearish, you might just go for the outright, quick move there. If you're somewhat bearish, or if you're just bearish, maybe you go for these scenarios. Hopefully that makes sense. I thought that might be a good illustration there. But for me, the best risk to reward on the the dollar index would be this 50% retracement. Makes a lot of sense. If you see that pullback, I like that trade, and I would probably take a very modest risk on it. So currently, what am I positioned in against the dollar? Gold. I'm long gold, which most of the time benefits from a weakening US dollar and is hurt by a strengthening one. So you can see the pop kind of getting faded today due to the dollar strength. I'm already in this trade, but if I wasn't, if we get this retest, I'd probably add here, or I'd probably go for a trade there. If we break that level, I'll take a very small loss. So we'll see. Some currency pairs, euro dollar. Again, if you're looking for the easiest DXY similar trade, it's just reverse it and look at the euro, right? Because usually DXY is just very inversely correlated to EU. They just, one goes up, the other goes down. So if that theory about the dollar index pulling back a little bit more to the upside, that would mean euro dollar likely moves lower. And this 61.8% retracement looks really good in my view. Not only that, I believe we have some nice confirmation on the edge finder. Do we? Yep, we do. So we have a bullish confirmation on the edge finder. The technical setup looks really good. It's now just a case of waiting, right? We've got to wait for that setup to actually show up. I've been mentioning that this week has been a theme of I have a lot of things that I'm willing to go long or short, but they're just not at levels that I can go long or short at. So the euro, I like the idea of getting long a little bit of euro, but it's not at my levels. So unless we see a big move lower, there's nothing I can do on the euro currently. The same story, but maybe a little closer to action. Nope, still not. Is the pound against the US dollar. This 38.2% retracement, if we get a move lower, if we get a little bit of a normal corrective pullback on the dollar index, then we could maybe look at the pound dollar a little closely. I like the idea of maybe getting a long setup on the pound right around 1.30. So we might get that setup. Maybe we don't. Maybe it just continues to rip higher. But if we get that setup, I do like that for possible longs. So I've got possible longs on euro dollar. I've got possible longs on the pound, dollar yen, maybe a short setup if we get a move back up to the 50%. But you can see where I'm going with this. There's a lot of stuff that I like, but there's not a lot of stuff that I like right now. So maybe a short if we get up to this point, but I do think that the dollar yen has some room to maybe bounce off these lows. It might go retest it first. The other scenario that I like for dollar yen, and it's kind of a hedge. I got Ivan asking about the yen. No surprises there, Ivan. If we see a takeout of the lows here, then maybe that's set to continue. But I don't think that's going to happen unless we see some sort of really big risk off flow going on in the world market. You know, I think the dollar yen maybe have room to go up and retest this 50% retracement. And maybe we see a repeat function of the 38.2% retracement, rejection that we saw. I just don't know that we're going to go screaming back up to the highs on the dollar yen at this time. With the Fed set to cut interest rates, I think that that's going to be at least an applied bearish pressure on the dollar yen for a little bit of time. Doesn't mean I think it's going to crash. I just think that there's kind of limited upside. I think you could see the dollar yen do this, but I don't think you see the dollar yen do this. Now, would that be nice? Man, would that be nice. If I could just get really long and then that happened, that'd be great. But I just don't see that right now unless expectations for rate cuts kind of go out the window. Why don't you set break even for now? I'm assuming you mean on my gold idea. And the reason for that is because risk doesn't, this one trade doesn't matter to me. At the end of the day, one trade in my trading account does not make or break me. I mean, it can make me if I have a really good trade, like it just keeps going and going and going, those can make a huge difference. But losses for me, my goal is to keep them as small and limited as possible. And so if this thing comes down and has to retest this area, I don't want to get out at that level. That was the area I got in. So I don't want to take a break-even trade. But I'd be willing to sit through a retest of that level. What I would not be willing to, I have to ask myself, what am I not willing to do? I'm not willing to just see this thing break through the lows. If that happens, I need to get out of the trade. Hopefully that makes sense. Why don't you trade miners anymore? Mandy, that's a good question. It's because, at the end of the day, I specialize mostly in watching US economic data. And so I really like to stick to the majors. It doesn't mean I can't trade minor currency pairs, but I have enough things that I watch. I trade a lot of gold. I trade a lot of indices, commodities. Those are things that I mostly trade. Sometimes I trade currencies, and when I do trade currencies, it's going to usually be the euro, it's going to be the pound, or the dollar yen, because these things have, a ton of liquidity. The spreads are very tight, and also I'm most comfortable talking about the major economies of the world, like the most major economies, like the dollar, the eurozone, and the UK. All right. Let's keep going. Nick, do you mind explaining what the carry trade is? I've gone over that a couple times. I have a video that I've dedicated on that. If you look up the carry trade, Trader Nick on YouTube, I've done like 3 or 4 videos on it. I'd encourage you to go watch those, but the explanation for the carry trade would take me a couple of minutes. So I'm just going to refer to those videos for now. I'll buy semiconductor indices if you say so. I'm definitely not saying that. Today would be a very high risk day to buy semiconductors ahead of Nvidia's earnings. SMCI is tanking. Let's take a look at what's going on there. Wow, look at that. 20% down on super microcomputer. Wonder what happened there. Delayed 10K filing. Interesting. Investors may be a little worried about what's in that filing. I don't know. I don't really watch this company very closely, but it is in the semiconductor world, so we'll have to keep an eye on that. SPX about flat on the day. Nasdaq's down, probably on that news. Maybe a little concern across the semiconductor space. What time are Nvidia earnings out? They're out this evening, 4 p.m. Eastern time. And the earnings call, I believe, is at 5. So yeah, we will. I will probably be live streaming that event. Should be fun. Should be fun for sure. All right, let's see what else. Silver's down 2% today. Gold's down 0.78%. Oil's down another 1.4% today. Yields, interestingly, there's a little bit of divergence here. Let's see how stocks are doing. Individual stocks. My stocks are not looking great today. I got CrowdStrike down 1.5%. Nvidia down 1.22% with earnings coming up. Tesla down 1%. Tesla can't catch a break. Come on, keep going, Tesla. Google down just shy of 1% today. Palantir. I'd like to sell some puts on Palantir. If we start to see a big sell-off on this, I might sell some puts on Palantir. Russell's down only 0.23% today. Let's take a look at the damage on SMH. SMH down 0.89% or so. Yeah, we will see. Today is a big day for semiconductor traders like myself. So we'll have to keep an eye on this. I'd love to see if Nvidia earnings come out strong. SMH probably could take out this level, which would be great. It's been a bit of a resistance at the 250 mark. And we'll keep an eye on that. Definitely going to keep an eye on that one. Also, I'd like to check on the put to call ratio, see where this is at. Yesterday, you had a little bit of bearishness come in. So let's see where we're at. The put call ratio basically shows you the volume of puts relative to calls traded. When there's a lot more puts that are bought or a lot of volume traded on puts, this thing goes up. When there's a lot more call volume, this thing goes down. When this thing is low, that usually tells you that the market is feeling very stable and confident and feeling great. When this thing goes up, it's telling you the market feels a little bit more nervous. And what you can see here is that we had the big spike of nervousness, but we also are kind of just lightly in the more concerned area than we are in the optimistic area. So markets, I wouldn't say are outright terrified right now, but they're also not incredibly optimistic either. With this rally that we've seen recently, we take a look at the SPX, you would think that markets are like fully confident again as we near all-time highs. Well, again, take a look at the put call ratio, and what we can see is that markets are still a little bit nervous. So just something to think about. I love the put call ratio. It has quickly become one of my favorite, single indicators to look at for market sentiment, because it tells you, how much are people buying puts for protection or bearish, bets, or buying bullish bets. When you get really bullish, you got to be careful that the market may be due for a little bit of a correction. And when things get really bearish, those are great buying opportunities. So we will see, but I think that there's probably been a lot of put buying in anticipation for NVIDIA earnings that happened today. Could be a very, very market moving event. And the interesting thing about puts and calls is that calls, are typically the more popular instrument because stocks usually go up over the long term. But the appeal of puts, there's a couple appeals. Hedge, many traders or investors who may want to hedge their portfolios. Maybe you're long on stuff, but you're worried that the NVIDIA earnings could tank the markets. So you buy some puts, you buy some out of the money SPY puts, and you say, well, you know what? I'm long a bunch of stuff. I want to protect my account. So I'm going to buy SPY puts, right? That's a very practical and common and even reasonable thing to consider doing. But there are other times where when we get really spiked and high in fear, this is where people are just getting outright bearish and they think the market's going to crash. And oftentimes those are great buying opportunities, which we saw right here. By the way, guys, look at this date. See this date? Remember this date for a second. August 5th. Okay. August 5th is this big red candle. Let's look at the put call ratio at this time. August 5th. It's the high. No coincidence there, right? Everybody gets super bearish and terrified at the bottom of the market. And are you ready for another mind-blowing one? Let's look at this. Let's look at two different scenarios. So let's just take a look at like July, June, late June, early July. Where was the market? Late June, right around here, right around here. At this time, market sentiment was really positive. So we had really positive sentiment there. At this time, we had really negative sentiment here. Notice how in both of these two examples, when sentiment got really crazy high, it was a very good opportunity to either sell some positions or get outright bearish. This would have been a little early, but you can see my point is that if you had gotten really, cautious up here and gotten really opportunistic right here, you would have made a lot of money. Now, where I messed up is that I stayed long over here, a little bit too long. This is all hindsight, by the way. That's the dangers of this. And I got overly optimistic here, which actually I got overly optimistic a little too early on this, but then I ended up making, nice gains on the bounce back. But using this, something as simple as the put call ratio, just to consider the pulse check of, and this is not our only sentiment tool, by the way. We also have this. This is the AAII Investor Sentiment Survey. This is a survey that polls stock market investors and asks them, are you feeling neutral, bullish, or bearish on the market? And how this trades over time is absolutely fascinating. Sentiment is something we specialize on the Edge Finder. The Edge Finder is currently 35% off. If you guys want access to this tool, we're going to drop a link here in the chat. You can currently get the tool for a one-time fee at 35% off its usual price. It's a massive discount. Don't miss it. If you'd like some information, you can send us a direct message about the tool here using the link that we just dropped in the chat down below. Great tool where to buy this. If you would like some information, again, that link will connect you to a member of our staff who can give you some information about the tool, send you the information pages, as well as answer any questions about your specific, what you're looking at in the markets and whether or not the tool might be right for you to consider. Nick, would you consider buying the NASDAQ here? I'm going to be honest, I would. I'm not telling you that you should, because you probably shouldn't, because I said that you probably should absolutely not touch any of it. But I like the setup. I am bullish on the NASDAQ. I already have positioning, but if I wasn't, I'd be looking at possible longs. However, with NVIDIA earnings right around the corner, that's super high risk, and maybe it's better to wait. But you should do what your own strategy tells you. You should not do what somebody on YouTube tells you what they're doing. That's not a strategy. Copying someone's ideas. I am very wrong sometimes. You want to see some of my buy entries on the NASDAQ? I bought here. I bought here. I bought here. I bought the NASDAQ at those levels and was dead wrong. The good news is I also bought it here and have made up all of those gains and more through good risk management. But my point is, my timing is not always right. Nobody is always right. I was very early 3 different times, and on the fourth one was absolutely the charm. So just something to think about. Also, can I pay using PayPal? Yes, you can. You can also pay using crypto. You can pay using debit or credit. If you'd like to get access to our tools, again, members of our staff, I just mentioned that you can send a direct message to them and they can hook you up with any information. Guys, we're going to take a quick break, and then Forex James is taking over the show to talk a little bit more charts. We'll hear about things like gold and indices and currencies and all that good stuff. So stay tuned. James is taking over the show right after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello, hello. How is everyone doing? Hope you're all having a good start to your days or end to the day, depending where you are. So this is EuroCAD. Really, really good trade. Actually, I've been in for quite some time. So I actually had my first entry on EuroCAD here after we had these daily highs formed and then sort of bearish sentiment came into the market on the H4. So I took an initial entry here. However, the market started to come back up. I scaled in right here, almost at, the perfectly wrong time. However, the thesis was fine. We just saw a slight continuation of the bullish trend before now starting to finally have this drop off. So what I want to show you is the seasonality behind EuroCAD. So I've been in since here, which was the 5th of August. I plan to get out on the 6th of September. So currently it's the 28th. So let's find that. So here, there we go. So over the course of 24 years, if you shorted or took short positions every year for the past 24 years between the 28th of August and the 6th of September, you would have won 7 trades. If you went long, you would have won 7 trades and lost 17. So if we're shorting, that obviously means we would have won 17 and lost 7. So the seasonality behind EuroCAD at the moment is very, very strong. And we're seeing that start to come into play here. So the 6th of September is coming quickly. So by this time frame, by this date, I will be out of the trade regardless of where we are in terms of price. I will be completely out of the trade because this is a trade based on time rather than anything else. There are economic factors behind this, but the final catalyst for this trade, or the main driver for this trade, was based on seasonality. How to use TradingView? Can anyone suggest some videos? Just YouTube it. There's countless videos for us. I'm halfway off the screen. there's countless videos on how to use TradingView. I'm not sure if Nick's got any. I'm sure he does it somewhere. But if not, there's a lot of videos there. Thoughts on euro dollar? So I am currently short euro dollar. In fact, I can show you. So I've got my copy trading account open here, and this is essentially just where I place the trades for clients on their behalf. So this is very small capital. You can see it's only got $1,300 in it. But yeah, I've been shorting euro dollar here since basically the tippy top. So this was on the 26th, so 2 days ago, placed a short in euro dollar. And the reason was it was basically looking for a reversion. So if we look on the daily, very, very overbought. Now, this isn't necessarily undeserved buying. I think it made sense for euro dollar to be bullish during this period. However, I don't think that we could sustain this for much longer without having some sort of pullback. Now, we might just get 50% pullback, and then that would be a trigger to start looking for some more long-term positions to the upside, especially as we're heading into rate cuts. However, as I said, it's more of a reversion. So if we look at the 200 moving average compared to where we were, it was about 3.3% above, which is a bit, that's a bit high in my opinion, along with reaching this level of resistance. And then we had this bearish daily candle form. So I was a bit like, you know what, let me take a stab. It's small risk. We've got tight stop loss, so happy to do that. And so far it's working out. We've got quite a bullish dollar on the day, bearish euro, bearish pound, and the yen is looking bearish as well. So it seems like I've caught that trade perfectly so far. Perfect rejection at 1.12. Yeah, I mean, that is my thoughts. I'm currently in short positions. However, whether that will last, I don't know. As for trades, you've got Eurocard still in my copper long position. It's in drawdown. We're also in natural gas. We're in a short position here. It's only a 1-to-1, so not crazy. However, this is just a sort of a small quick play. Now we've also got gold here. So what I'm doing on gold is I'm collecting buy signals. So I'm not sure if Nick watches from behind the scenes when he's not here or not, but Nick will understand this more than I do so far. I'm still a small fish in a big pond in terms of audience size. So when I take a position, it's not too often I'll get people start filling in their opinions. However, I did with gold. So I'm marking these up. I'm going to keep them here, as buy signals. I mean, don't get me wrong. It's possible gold could come back down, have a profit taking period where we see a drop off and then continue up. However, I just don't see any world where gold is bearish. And what I have to back that up is not just Twitter screenshots. Hold on, let me just pull something up for you guys. So we had another news article published today. This was on FX Street, but it's by TDS. A period of high, a period of high deficits, slowing growth, sticky inflation, currency devaluation, and imminent cutting cycle has already attracted capital towards gold's warm embrace. TDS senior commodities strategist Daniel Gali notes visible short positions remain near decade lows. So this is, that's quite important. So there's not been this little amount of short positions in gold for decades. So I won't read all this, but as I said, it's on FX Street. Just search for the article title if you want to go and read it. But it's just article after article, bank report after bank reports, data after data that just suggests gold is going to continue to the upside. And as I said, in the short term, we might have a profit-taking period, which could stop me out at break even. And I'll be perfectly honest, I would love to see that. I'd be more than happy to get stopped out here, see price come down, and then continue to the upside. And the reason is because then let's say, for example, say we come down to here, so around anywhere, so 2400, let's say. This would allow me to get in gold at a cheaper price and ride it to a higher price. So it's just a better entry. That's the way I would see gold at the moment. There is no no catalysts for shorts. And that's just as simple as it is. And it's not necessarily a case of this is my opinion. It kind of just is the data at the moment. Hannah Lulu, copy trading is application only. It's not for regular, or sorry, it's not for lower capital clients. So if you've got sort of 10 to 20,000 in capital or above, you can go to our website and apply. However, it's not a service we built for sort of just everyone. What's your thoughts on dollar CAD? Let's see, dollar CAD. We should be having a pullback on dollar CAD. Yeah, we kind of are. What's the dollar doing? Yeah, so dollar CAD is quite clearly in a very strong downtrend. However, it's a similar situation to a lot of other pairs at the moment. I think we're very overextended. I think realistically what we're going to see is a mix, or well, mainly some profit taking, and that will also allow sellers to come into the market to continue to push price down, because at the moment sellers won't want to get in at this price. You know, we've had 3 consecutive bearish days, and since, you know, we've also had basically a month of non-stop selling on dollar CAD. So any serious sellers looking to get in won't be selling at this price, more than likely, unless, you know, they're averaging into positions. But yeah, the way I view it is we need to have some sort of pullback, and that's essentially what I'm looking for here. I'm looking for a pullback from the low to sort of 50%, so maybe 150 pips. This would also allow price to catch, it would allow the moving average to catch up with price. So the 200 red moving average you can see here, that would sort of stabilize a little bit. So yeah, that's sort of the way I see it. Gold usually drops in September. Yeah, however, you know, there's just not any data to back that up. If you're using seasonality and historical data to trade, you still need to match it with things. You can't just go, okay, well, it's bearish in September, I'm going to start selling. Because it might be bearish 6 out of 10 years, but there's still those 4 years where it could be bullish, and it could have been bullish for a good reason. Swiss yen, we are also long on Swiss yen. So this one looks so far pretty healthy. The only sort of problem I see here is we've got this level of sort of resistance that we seem to be stuck at. However, as I've been saying, I don't really think the yen has much steam. I just don't see much of a possibility at the moment where the yen's going to continue to the upside. And something could change tomorrow, the day after. Maybe I'm wrong, but so at this point in time, I'm quite bearish on the yen still. We also have these moving averages. Let me find my brush here. We've got the 200 moving average, so the 200 daily moving average. We've got the 21 and the 8 moving average. All have come and sort of swept underneath price, which can be a good sign that we are possibly starting to change trend from bearish to bullish now. Hi James, will we see more decline on dollar Swiss, or do you expect this to be a good are you expecting this to be a good area swing by as we're near all-time lows? Let's see. I wouldn't be looking to get into long-term dollar positions just because we still need to see NFP. NFP is going to be quite big. It's going to be very sensitive. So the way I see NFP is if we get 160, actually, let me pull up the edge finder so I can sort of visualize it for you here. So this 114 that we had was kind of a shock. You know, no one really expected it to be this low, and it's the lowest we've had all year. I don't expect us to go close to 114 again. I would suggest the next one would possibly be 120, and that's been low. So if we get a if NFP next week or the week after, I think it's next week, comes out at 120, that would still suggest weak labor market, which would then in turn shift my bias more towards a 50 basis point cut. However, if we get something closer to 160, that would show an improvement, which would then possibly shift it more towards a 25 basis point cut over a stretched period, so 25, 25, 25. So yeah, I mean, just because of that, I don't want to really get into dollar positions for the long term. However, if you are looking to get in for, you know, some sort of short position trades, so whether it's, you know, day trades or intraday, so sort of a couple of days, maybe you could start looking to go long off the support. You would need to account for the previous low down here. So stop somewhere there, and you would just need to pay very close attention to the DXY. Now, the DXY can close bullish for today if we can sort of close like it is, so engulf the previous daily candle. It wouldn't necessarily be a bad position to be in, although you are counter trend trading. So obviously you need to apply your own strategy and analysis to it. Are we going up or down on the DXY? It's currently up, but in terms of where it's going, I wish I could tell you, because then I would be a trillionaire. But unfortunately, no one can really tell you if it's going up or down in the future. Pound Swiss. So I don't know if any of you guys really watch my stream segments often. However, if you do, then you'll know I'm very bearish on the pound. And yesterday, Keir Starmer, which is currently the Prime Minister of the UK, said things are going to get much worse before they get better. Which, you know, isn't a shock. I've been saying that, but, you know, maybe I should be in Parliament. I should start running. I think it costs about £150,000 to run, roughly. So maybe I'll do that in the next 4 years. You'll see Forex James on your TV announcing a new Liz Truss mini budget to crash the pound for you all. Obviously, I'll give you a signal on that one. But yeah, no, on a serious note, I don't want to be long the pound. So even pound dollar, I'm still a little bit still on the fence, although I do think it has more upside. I just don't want to go long. Pound Swiss, I think, does look good. I like the Swiss. It's always a good currency to have in your portfolio, the same as the dollar. Obviously, depending if you can manage your risk and handle drawdown and things, but generally speaking, the Swiss is good. And monitoring what's going on in the UK economy, definitely not a bad idea to possibly look for shorts. Just watch out for developments in the UK, although even the developments we do get more than likely will be continued bearish signals. Do you think euro dollar has reached a buy zone? No. I've already covered euro dollar, but I am short euro dollar. Feel free to rewind. I don't really think it has much more upside yet. I think it does in the long term. But right now, I think it needs to just relieve some of the pressure it's got and allow some buyers in. What do you think about Australian yen? So I'm still in Australian yen, still in my buy position from up here. I closed out of my other position, which was, I think it was up here somewhere. Closed this one for a loss and scaled into dollar yen. But yeah, I think Australian dollar yen has more than enough potential to come back to at least a 50%. So possibly something along here. And that's been, you know, quite pessimistic, really. I think, I mean, it depends on the time frame. If you're talking about the next 6 to 12 months, I don't really see a reason we couldn't sort of correct this whole move. But if you're looking for short-term trades, I would stay away, because this consolidation is disgusting. You know, this is not something you'd really want to sit in if you're trying to day trade or even swing trade that. GBP USD come down. Yeah, I think a lot of the dollar pairs have room to come down. I think they're very overextended. We need to see a pullback to allow more buyers or sellers into the market. Let me go over my little black book here. Let's see if there's anything new that I can discuss with you guys. So the way this works, if anyone doesn't know, is I create this every every Sunday I go through and basically reset, but throughout the week I update it. And this is all information from bank reports. I aggregate it and take out key points for every currency. And that way I can just filter things very quickly and very easily without having to go back and do too much messing around when I'm trying to work. So let's see if there's anything important here. The outlook for the dollar short term may consolidate in the 100.5 to 101.6 range. Medium term potential breakdown of the DXY below 102 could signal a bearish trend for the USD in 2024. Seasonal trends: the USD strength is expected to vary with weakness from September to mid-August. To mid-October. Election year: USD may rise approaching the US election, but overall bearish for 2024. I use the daily and weekly timeframes for my sort of levels and analysis. So more than generally speaking, I use the fib on the daily, and I'll draw my levels and things and watch on the weekly to make sure I'm not buying into or selling into some major level of resistance. Then I'll use the H4 and the H1, so the two charts at the bottom, for actually executing the trade. But yeah, it's quite simple, really. So the two top charts are for top-down analysis and the bottom two are for executions. What do you think about the BOE rate cut policy? Well, it's not really much to think. If they're cutting rates, they're cutting rates. What do you think about gold? I'll leave gold on the screen for now because I know a lot of people like gold. But yeah, got my two buy signals here. How many trades do you take a week on average? Not many. So, I mean, it varies on market conditions and on the economics and what's going on. Generally speaking, I'll take maybe 1 to 2 trades a week. And then what often happens is my losses will be closed out quite quickly, and then my runners will be left. So what happens is my equity curve often looks something like this. So it'll have a period of up, and I'll have a sharp drop, and I'll have a period of up and a sharp drop. And what's going on is when I'm placing new trades in this period, the losses all get closed out a lot quicker than the winners. So this is what caused the downwards trend. And then obviously I close out my winners a lot later because I let winners run. And I, generally speaking, use tight stop losses. Obviously that's relative to the time frames and things, but yeah, normally 1 to 2, maybe 3 trades a week. Australian dollar. Yeah, so similar thing, just looking for a pullback, really. So from the previous low to high, looking for 50% pullback. This lines up really nicely with this previous resistance through here. And this is also the 50% level. And this would also meet the 200 moving average. So technically speaking, this is quite a clean setup. However, will we get it? I don't know. As I've been saying, I do like the Australian dollar. I think it's pretty strong at the moment. So maybe a bit optimistic trying to look for a lower price here compared to something like euro dollar that's seeing quite a lot more pressure to the downside. But yeah, don't think there's anything else. It seems like the dollar's losing a little bit of strength here, but that's fine. Let me just double check. Oh yeah, Euro Australian. So again, I've been watching this one for a while. So I've been saying that we had a head and shoulders on Australia. On the Euro Australian. I don't really trade head and shoulders, but when it's there, it's there. So we've got left shoulder, head, and we've got right shoulder here. So we're very clear, it's, even if you don't trade this, it's quite obvious that it's there. So I was waiting for a break of this neckline or the support. And now just looking for a 50% pullback, which would be also a retest of this level. And then I can get in to go short. As I said, I quite like the Australian dollar. I think the euro has some room to the downside, obviously with the euro CAD and euro dollar short positions I'm in. So yeah, any buy zones for euro dollar? I think the only buy zone I'm interested in really is this fib level down here. So between the 1.099 to 1.095. I just can't really see anywhere else where it would be a good buy. I mean, you could be very aggressive if you're going for a shorter term trade. You could say that this is the break and retest to continue up, but I don't really see that happening. And the reason is, if we look at the weekly chart, this weekly candle so far looks very bearish. We failed so far to hold above this previous sort of wick. The RSI on the weekly is very overbought. So yeah, I think we do need to see some sort of downside movements on euro dollar before we go further up. When is Nvidia earnings? Nvidia's after the bell, I think it's called. So after market close, I think it's 4 p.m. Sometimes, so I'm not sure. I don't trade stocks, so a bit out of my depth. Let me, you know what, you could have just done this, but I'll do it for you. I'll Google it. Oh, I actually can't find it. Anyway, yeah, there you go. Do some Googling, it'll come up. So NOXEC, been looking at this one as well for a long time. Still no buy zone, unfortunately, just consolidating. I'd love to get into this one. And again, this would be a long-term hold, so it'd be one into next year. The problem is, I just don't want to buy in the middle of this this sort of triangle that we're in. So really, I either need price to come back down to this level of support, or I need to see the break and retest here. So I need to see, obviously, you know, quite clearly a retest of this trend line, and that would allow me to get long. It's just not doing anything though at the moment, so it might be one that I just get rid of. I'm not a huge fan of sat waiting for trades for a long time. It just seems a bit counterproductive after a certain amount of time anyway. So the dollar NOK is one that I really want to get into. So I'm just waiting to see if we can get a slightly higher price, which would also be the retest of this trend line. So that would then let me get in short. So we can see on here, we've got the 200, the 8 and the 21 EMAs that have all crossed and now in a bearish trend. So to me, that signals, you know, a trend change, broken out of the trend line. So next thing really is we either get this break and retest of this trend line, or we break below this level of support and retest and come to the downside. So one of those two situations is fine with me. It's just which one are we going to get? I don't know. We'll see. And then maybe a target down here. Yeah, so I've got this level here at 9.19 marked up as well. That would be sort of the end of 2025 target. If we can get down there, that would be great. Yeah, I think that's about it. In terms of the indices, not seeing too much today, kind of flat. We are at quite a nice level of resistance here on Dow Jones. But yeah, whether we'll break this, well, we will break it eventually, but whether we'll break it, you know, today or this week, not sure. I would really like to get in long at a 50% pullback. If we can get that, that would be, you know, perfect, really. It would also allow us to come and meet this 200 moving average a little bit more. We're currently 7.3% above, which is a bit too much for me to be buying. I always like to pay attention to where the 200 moving average is on the daily time frame, because it can be quite a good signal of possible pullbacks if we are too far above or too far below it. Same thing with NASDAQ. So I was in NASDAQ buys, so you can see here. So I'm not in this one, but I did take a buy position here and closed out for, yeah, just over 1%. It wasn't anything crazy. So I'm not in these. Let me get rid of it. So yeah, the play on NASDAQ in my book is, if we didn't have NVIDIA earnings, I'd be probably buying it here. However, we do have NVIDIA earnings, so that changes situation a little bit. So really what I wanted to see is bad earnings on NVIDIA. Now, I don't think that will happen. I think NVIDIA will more than likely meet expectations or surpass expectations. I don't see NVIDIA really underperforming. So with that said, I don't think NVIDIA is really tradable at the moment, because if it does come out too negative or lower than what investors want, the market will be very sensitive to that, and we will more than likely see quite a large downturn on NASDAQ, which again could lead to potentially this 0.5 level. However, if they are going to surpass expectations, which I have a feeling they will, then I don't think we'll get any type of retest here. I think we'll just shoot up. And whether, how much, no, I have no idea. So yeah, that's why I'm not really looking to trade right now. I will be watching though. I think it'll be interesting. There is nothing new on gold, really. So yeah, at the moment it's kind of flat. Pound Canadian. I am looking to get into pound CAD. Actually, I think it's still the top reading on Edgefinder, which it is. So you can see here. Sorry, 1 second, just reading the message. Yeah, so you can see here pound CAD, top bullish reading. Let me just load the data. Seasonality looks okay. COT is flat. Retail sentiment, seasonality, trend, GDP, manufacturing, employment and unemployment all favoring this. The only negative thing is retail sales, but it's fine, I think. In my opinion, that's not a problem. So yeah, really looking for this pullback here to the sort of 50% level. Somewhere around here would be fine. And I wouldn't be looking to take this too high. Going back to what I was saying earlier about being quite bearish on the pound, it would more be just playing the current data rather than playing what I expect to happen in the future. So it would be a short-term trade. Stop loss possibly quite tight around here. So at the 1.76 roughly, and taking it sort of 50% into this level of resistance. And yeah, we'll take it from there. But yeah, guys, if there's any more questions, let me know. I'm not sure. I don't think there's anyone else after me again today. Let me just double check, make sure I'm not running over. Yeah, okay, so it's just me. So that's fine. If you've got any questions, feel free to shoot them through. If not, let me see. Actually, I've not checked today if the Fed watch has changed. I know it decreased slightly. Was it yesterday? Yeah, so it is decreasing. So a month ago, we had an 11% expectation of 50. Then it was 38, so we had a jump. I think, yes, this would have been after we had such a shocking NFP. Then it went down to 36. Now it's 34. And we can see that the 25 basis point is increasing. So that's telling us that the markets are more expecting 25 basis points. However, 50 seems to be priced in already. Thoughts on New Zealand dollar? Yeah, so New Zealand dollar isn't too great. It's not something I would really like to hold in my portfolio because it's pretty weak. It's just not. It's not something I would really like to have due to the double dip recession. It seems to just be a bit meh. You could have a lot of different things. So yeah, I would quite happily sell compared to the dollar. Buy compared to the dollar, but Yeah, I don't know. I could see it quite easily getting up here to the previous high. However, the problem comes in again with, does it need a pullback? Not necessarily, because we have kind of broken and retested this level of resistance. So if you were going to buy after this H4 candle, might be the best position to do it. However, it's not something I would take. And of course, this isn't financial advice. I'm not telling you to buy it after the H4. It's just the way I would do it if I was looking to. EuroCAD. Of course, I can check EuroCAD because I'm in EuroCAD, and I'm quite proud of my position on EuroCAD. So I won't explain this one. You can feel free to rewind the stream. I've already covered why I'm short. Essentially expecting bearish moves until the 6th of September. And by then I'll be closing out more than likely, unless some crazy change with one of the currency pairs or one of the currencies. So yeah, seasonality is very bearish on EuroCAD. So Euro Yen, I think we could quite easily see some more upside on Euro Yen. The problem is I view Euro and Yen as quite bearish at the moment. So I think the Euro needs to fall slightly, but not for the long term, whereas I am more long-term bearish on the Yen. So Euro Yen wouldn't surprise me if we do start seeing some sort of bearish movements in the short term before we can start correcting the move up here. So I would more be looking for potentially a long position down here and then a correction. I'd love to say that we could correct this full move, but the problem is I don't know how long that would take. And, you know, we could get up to this level and then the MOF comes in and starts intervening again. So it's a bit of a tricky one to try and forecast, really. But I do see a correction coming at some point. It's just where to and how long, I don't know. What do you think about German 30 1 hour time frame? Do people still trade German 30? I'll look at German 40 because I don't have German 30 on here. Wow, that's really sad. Actually, I was watching this and quite clearly missed a lot of this move. So let's see. I mean, we are at quite a strong resistance. We've had absolutely no pullbacks here. We've had a couple of bearish candles, but nothing really for a buyer to try and get in from. The daily's overbought on the RSI right here. The weekly actually looks quite healthy, but this resistance on the weekly also looks really strong. So depending on the way you trade, if you were going to look for shorts, excuse me, right here wouldn't necessarily be too bad, but you would need to account for trading against the trend. And this would have to be more of a reversion trade or pullback trade to try to get long. So I wouldn't short there. However, if you were, I can see why. So yeah, I'd be looking more for something like this. So we'll see if we can get that, but I wouldn't hold your breath, to be honest. If you're not in this bullish move, it's kind of a situation to sit on your hands. You're long Euro Yen, good stuff. Yes, I am long gold. You know what? Seeing as no one else is asking for charts right now, we can definitely cover Bitcoin. Although I say this every time, I don't trade crypto. I have very limited knowledge on it, so don't just I'll explain it on a very, very surface level. Actually, the daily doesn't look too bad. We are showing quite a strong rejection of the 200 moving average right here. So for anyone that doesn't know, why I keep referencing this 200 daily moving average, it's because it can act as a very good dynamic support or resistance for price. It's almost like a magnet. So when we get too far away, we often pull back to it, whether it's long or short. And when price comes to it, it can often dictate or help display what the trend could be. So for example, here we didn't really manage to hold below for very long before we started coming back up. So yeah, it can be quite useful. Anyway, wouldn't surprise me. I guess the trend is technically bullish if we use the moving averages. We are creating higher lows. So we are sort of in this uptrend here. And yeah, this is a higher high compared to the previous high. As again, guys, I know this sounds very, very rudimentary, but I'm not a crypto trader, as I said. So this is what you're going to get if you ask me to do crypto. So I would be looking more for something like this. However, again, take this with a grain of salt. Very limited knowledge here. CAD yen. Same thing, again, consolidation. Ugly mess, nothing to trade here. Wouldn't be surprised if we do see a pullback to somewhere. Maybe to the 618 level, but yeah, it's very difficult to tell. Because we could come up to this 0.5, so the 50% pullback, and then meet this 200 moving average and continue to the downside. And that's, of course, more referring to technicals rather than what the markets, what the driving factors of the market are. Overall, I don't see an issue looking for a correction. However, it is quite risky. Okay, so we'll do the last two, so Australian, New Zealand, and the dollar Mexican peso, and then I'll call it a day. So I was looking to go long on here. I think I still am, really. Where did I go long? Oh yeah, so I went long on, I think it was this pullback here. This was clearly stopped out, unfortunately. So we do have quite a nice level of support through here. So longs, maybe not a bad idea from here, targeting the 1.11 level. Let me see if we've got any data for this one, if we've got a trade idea. Yes, we do. So we've got the Australian dollar is trading within a triangle range pattern with technical indicators showing a bullish setup. The AUD is expected to outperform the New Zealand dollar, as suggested by favorable buying dip strategy in AUD/NZD. The divergence in economic fundamentals and central bank actions between Australia and New Zealand supports this view. Technical factors, target levels include a move towards 108. So let's copy that with potential upside to 1.0. So what level are they talking about here? Well, that doesn't make much sense. They must have different quotes to me or different pricing. 1.1. Was it 1.1? Yeah. Okay. So we could, set this as TP1, take profit 1, and go for sort of a 1 to 2. So maybe I will consider this one. I haven't checked this chart in a while. Something else to look at is the weeklies just above this 200 weekly moving average. The daily has closed below, but will it be sustained? Will it be like we saw right here, where we did see sort of closures below and then a flip back to the upside? Yeah, we'll have to see. So maybe if we can get a convincing daily close here, I might take a small position. Oh yeah, so do dollar Mexican. So yeah, you can see we were short here, and then the economics behind this one flipped bullish for the bearish for the Actually, what happened on this one? I can't remember what this one was. This wasn't my trade. It was one of my traders' positions. I can't remember exactly what that trade was. I have to look at that after the stream. However, it's tricky. Let me see. Again, just referring to my my little black book here. Have anything in Mexican? The MXN remains undervalued. Sorry, not undervalued. The MXN remains vulnerable to volatility despite narrowed overvaluation. Forecast suggests USD MXN at 19.5 by end of 2024. So where is 19.5? Let's see. Okay, so basically where it is. Likely to continue rate cuts, potentially down to 8.5 by 2025. So if they're looking to cut rates, the Fed's also looking to cut rates. Potentially a no-go zone. The target by the end of the year is basically where we're already at. I wouldn't really be looking to trade this one on an economic standpoint. If you're looking to day trade, maybe looking for some longs. You know, we've got the H4 bullish, we've got the hourly bullish, we've got the daily bullish. On the weekly, the moving averages have just crossed into a bullish. The 200 weekly moving average just came underneath price from being above. So yeah, the bias here is long, but yeah, not really much there to support this trade. Right, we'll take one last look at gold because I see it coming up quite a lot, and then I'll call it a day here. So gold is bullish. The only situation that I can see where gold would suddenly just turn bearish is if we see a profit-taking dip like we saw here. So we came up, had a drop, came up and had a drop. Same here, we came up, had this drop, and again here. So if we have these profit-taking periods where we do see gold start to come down, fine, then, you know, it's just a lower price to buy. However, all of the economics, everything really behind gold that's actually driving gold is bullish. We have Fed cuts, we have elections, we have tensions. So yeah, it's like, what really is there to push gold down? Other than profit taking, I don't see anything. Now, eventually, gold will need to come down. As I was saying earlier about mean reversions, when we get too far above this moving average, it's not uncommon to start seeing pullbacks. However, this is on the weekly time frame, so it would take a long time. So let's see, last time we were overbought on gold compared to the moving average, it was 43% above. And so give me one sec, date range here. So it took 791 days to correct. So over 2 years. So far, I'm not too convinced that gold is going to have a mean reversion now. As it, you know, it might happen at some point, but for now, I'm quite happy to stay in my long positions. It's not a concern yet. The site I'm reading fundamentals from is my Notion thing here. So I send this out to my Discord every day. I keep them updated on what the bank reports are saying, what the Fed Watch says. I give them basically a breakdown on what the institutions are saying. Yeah, Anton, I agree. I think it's going to be 3 cuts of 25. Anyway, guys, I think that's it from me for today. I have run out of things to talk about, and there is no other charts on my watch list. So then we'll call it a day. I appreciate you all being here. As always, you've been a great chat. I hope you all have a great rest of the day and a great rest of the week if I don't see you before. Yeah, so have a good day. I will see you very, very soon.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.